Hey everyone, welcome back to the Modest Wallet YouTube channel. I'm here to make money simple, so hopefully I can do that for you. This video is sponsored by Concrete, but more on that later. Are you an accredited or non-accredited investor?
These schools are accredited. There's one that is not.
In this video, we're going to talk about what that means, the difference between the two, and really why it matters.
Does it even matter? Why does it matter so much to you?
I'm also going to share about a company that makes investing in real estate possible for both the accredited and non-accredited investor. Thanks so much for checking out our channel, guys. I'm Sean, and I've got a great informative video for you today. Now, if you're like me, you've probably heard someone say, well, you have to be an accredited investor in order to invest.
You need to be accredited.
Let's first talk about what that actually means. Accredited investors have access to certain investment opportunities that non-accredited investors, don't have.
I have access to that.
An accredited investor is someone whose net worth, expertise, or income qualifies them as a knowledgeable investor. Something like someone who understands the intricacies and the complexities of investing in unregistered securities. An unregistered security is one that is either not traded on a public exchange or has not received authorization from the U.S. Securities and Exchange Commission, the SEC, to be marketed to the general public. According to the SEC, an accredited investor is an individual or business entity that meets at least one of the following criteria. They had an annual income exceeding $200,000 for individuals and $300,000 for couples in the last 2 years, with the expectation to earn the same figure or higher in the current year. They have a net worth exceeding $1 million either as an individual or jointly, is a general partner, executive, director, or holds a similar role at the company that is issuing the securities, or can demonstrate that they are qualified to deal with unregistered securities. Meanwhile, the amendments introduced in August 2020 included the following criteria. That criteria said that they held a financial sector certification or credential such as a Series 7, Series 65, or Series 82 license, is a knowledgeable employee of the private fund that is issuing the securities or one of its subsidiaries, or is a family office or a family client as defined by the Investment Advisors Act of 1940. Now that we've cleared up what the term accredited actually means, we can now define the characteristics of an unaccredited investor. In summary, a non-accredited investor is any person or institution that does not meet the criteria I mentioned already to qualify as accredited.
Is not accredited.
These investors cannot participate or invest directly or indirectly in unregistered securities and funds, and companies are not allowed to promote these investments to them.
Be a slight promotion.
Being an unaccredited investor is not necessarily a bad thing, as there are many investment avenues such as stocks, bonds, exchange-traded funds or ETFs, mutual funds, cryptocurrencies, mainly Bitcoin and Ethereum, peer-to-peer lending, and real estate, meaning physical, REITs, and other crowdfunding sites that will allow unaccredited investors to get exposure to most corners of the real economy and financial markets. However, not being accredited does limit the range of vehicles that are available to investors to participate in certain opportunities. And speaking of certain opportunities, there's this site and app called Concrete that I recently came across that allows you to invest in fractional shares of real estate. And one of the best things about Concrete is that it is available to accredited and non-accredited investors, as we have been discussing in this video. You heard that right, you don't have to be some crazy super rich person in order to get started in real estate. You can invest in private equity real estate from the comfort of your own home or really anywhere with your smartphone. And you don't have to have a huge down payment or deal with tenants calling you to figure out the major problems they've been having at the rental property.
We have a huge problem.
You get to diversify into real estate without the many headaches real estate can possess. Now, two of the biggest drawbacks when it comes to investing in real estate is not really having the capital to get started or the knowledge with where to start or how to do it.
Do it!
At Concrete, with as little as $1, you can get started and you don't have to be some crazy real estate expert to do it. And now with the markets being a little crazy like they've been, you're probably wondering what kind of return you can get. They're currently offering a 5.5% annualized return on investment with the money or funds that you choose to invest with them. And to top that off, maybe you get yourself in a little bind and need to pull your money out, or maybe you met a major goal with your concrete investment and you want to pull your investing money out. You can do just that, making your investment very liquid, as funds usually transfer about a week out from approval. This is something that I really feel sets them apart from other investment opportunities. With concrete, you don't have to deal with the stress of picking and choosing individual investments. They fully manage your investments with their team of professionals, and your money is diversified across hundreds of high-yielding income-focused mortgages in the United States. Concrete's motto is incredibly easy fractional real estate, and that's what you get when you decide to invest with them. You can also really trust Concrete with their serious security and privacy and protection. All data on their servers are encrypted with AES 256-bit encryption, the same as what top banks use today, and your data will never be sold. You can get started with Concrete in 3 simple steps. Step 1, download the app and invest your money. Step 2, watch your money compound and set up automatic investments. And step 3, hit a goal or have an emergency, schedule a withdrawal, as we already mentioned. So if you want to join the more than 30,000 other investors, accredited and non-accredited, you can easily do so by downloading the Concrete app at the App Store or Google Play, or go to concrete.com to learn more. I'll leave a link above and also in the description if that's easier for you. Let me know what you guys think about Concrete in the comments as well. Now that we know that Concrete is available to both accredited and non-accredited investors, let's briefly look at a few frequently asked questions when it comes to the differences between accredited and non-accredited investors. The first question is there a way to qualify as an accredited investor with low income? That's a great question, and the short answer is yes. For individuals who may not meet the income or the net worth criteria, there are other alternatives to be considered accredited. One of those options is to prove that the person has sufficient knowledge about how unregistered securities work, and another one is to be or become a licensed financial professional. The next question is, why do I need to be an accredited investor to access some investment vehicles? The SEC deems unregistered securities as riskier than registered assets such as stocks and bonds. Therefore, they created the accredited status to prevent unwary investors from exposing their capital to investment opportunities whose risk and intricacies they may not fully understand. Another question is, how long does it take to become an accredited investor? There is no time constraint for becoming an accredited investor. Once the individual meets one of the requirements established by the SEC, the company that is offering the investment opportunity can immediately review the documentation and complete the vetting process. Are there penalties for misrepresenting your accreditation status as an investor? In most cases, the consequences of misjudging if an investor is accredited or not fall on the company that is offering the unregistered investment opportunity. For investors other than the ethical or moral matters involved, the legal repercussions are limited, as the company is responsible for screening investors based on the criteria established by the SEC. There are plenty of opportunities in the marketplace for both accredited and non-accredited investors. Most of the investment vehicles offered to those who meet the criteria to be considered accredited are either more complex or riskier compared to traditional registered securities. That said, whether you invest in stocks, bonds, hedge funds, or real estate, it is still crucial to understand what you're getting into and perform adequate due diligence before putting any money down. I hope you enjoyed learning more about accredited and non-accredited investors and how you can do that with the Concrete app, whether you are or not. Thanks so much for watching, and I'll see you in the next video.